Good morning, guys. It is Thursday, May 23rd, 2024. This Bathrobe business. I'm George Yogan. I've got my hair actually looking good for the camera today. So, well, as good as it gets. So let's jump into the news. So I'm still getting used to this layout. Like I said, I'm still experimenting with new software so that I could show you guys some of the statistics, articles, and stuff that I read in the morning where I delivered the news to you. So I'm messing with Yard Stream right now. Yesterday's video kind of sucked because I was casting a video and I don't know. I think I figured out why it didn't cast properly. So I could hear it, but I don't think you guys could hear most of it. So that sucks. But hopefully today's video goes better. I just pretty much broadcast it live. So I just broadcast it, walk out the door, and then I'll look at it later and see how it looks. And it was terrible. So I apologize for yesterday's video, but hopefully today's goes a little bit better. So let's jump into the news. So I'm going to try to cast it again like an idiot. Okay, so the first story I have to talk about is AI. So AI is kind of dominating the market again as Nvidia just posts record profits. So this article is from CNBC. Nvidia shows no sign of AI slowdown after over 400% increase in data center business. So their data centers are growing by 400%. What's interesting is I think a lot of rational people think that AI is in a bubble right now. And a lot of the major moves in AI or the low hanging fruit have already happened. However, Nvidia with being hardware, I think kind of does change the game. So I think there is actually more room for growth in AI. Now, what's interesting about this article is they're building data centers. And a lot of these data centers are being sold either to Amazon, Microsoft, Google, Oracle, etc. But some of them are being sold to GPU data centers that are essentially startups that build a data center and then lease them out to various companies, lease them out to startups, lease them out to the big corporations, whoever needs them. So, for example, CoreWeave is a company that was mentioned in this article. It's a GPU cloud that is currently quoting companies $425 an hour to rent their Nvidia H100s. And so this is actually an interesting market because they're third-party AI centers, essentially. And what's interesting is the ROI on some of these things. So the company talks about, with one of these companies, let's see, earnings. So if a cloud provider spends $1 on NVIDIA hardware, it can rent it out for $5 over the next 4 years. So essentially, after the first year, it's almost a break even. Really, in year 2, it reaches break even and profit. So that is pretty expensive upfront cost. And remember, I don't think that counts operating costs. I don't think that counts electricity, maintenance, etc. But just hardware cost alone, that's pretty good. And what's interesting is at Meta, it actually gets even better. So every dollar that Meta spends on NVIDIA, they're getting 7 back in revenue within a 4-year period. So essentially, Meta is operating at a profit already within the first year with their AI investments. So I think there is actually still room for growth here. We'll see what happens in the next quarter. And also, NVIDIA is probably going to be going under a stock split. But I think there is actually a little bit more room for growth. I don't give too much stock advice. I try to give analysis on business and the market. But I think this is one where I may buy more NVIDIA. I have been in NVIDIA before and I exited. But I may get back into it. So we'll see. So that's that with NVIDIA. Now, in other news, Amazon Alexa is getting a major overhaul. So Amazon Alexa plans to, let me switch screens. You can't see my beautiful face. Where am I? Could you see me? I think you can see me. Okay, maybe not. 1 second. I really hope you guys can see these articles because I honestly don't know if you can. So Amazon, I think you can see that. Amazon is planning to upgrade Alexa. So they're essentially going to overhaul Alexa with AI, make it a more powerful voice assistant to compete with ChatGPT. Now, one of the things I have a problem with in this article is the fact that they're going to be charging for a write-off. So I don't think this is actually a viable product. I think this is a financial play. So in other words, what they're doing is they're using this just to hype the stock and to raise the stock price. I don't think this is a serious investment. And I think that because in Silicon Valley, when you want a serious investment, you give it out for free. You build a platform and then you start charging for it. And that's usually the case with most companies. And I know if you watch my channel, I'm one of the people that argued that that's the wrong way of doing it. But I'm just saying you can kind of gauge the seriousness of a company based on how they give away the product first to build the network, because most of the value oftentimes with Silicon Valley is the network itself. So they'll build the network and then they will charge for it. Maybe the argument here is everybody already has the Alexas in their house, the network is built, and now we're just going to offer the upgrade. But I don't know. I don't feel like this is a serious measure. I feel like this is a measure that Amazon is doing just to raise the stock price. But I thought that was worth mentioning. Last article I'm going to cover for the day, because I'm already late for work. I'm supposed to be walking out the door right now. Jamie Dimon. So Jamie Dimon is talking about a hard landing. Now, JP Dimon often is very hawkish and very bearish all the time, it seems like, in the last 2 to 3 years. But I do think there is enough worry in the market that his outcome could be possible right now because of stagflation is a very good possibility. We are dealing with record inflation again. And I will say record, because if you measure it the way we did in the 80s, it is at record inflation. But we're facing record inflation again. And if we hit a slowdown, we will have stagflation. Now, I will poke a couple holes in his argument. Unemployment is still incredibly low. In fact, just today, U.S. applications for jobless benefits fall as labor market continues to thrive. So unemployment remains incredibly low and is going to remain incredibly low. Now, part of this we've talked about before is a demographic issue. So because demographics are the fact that boomers are retiring and that we're moving into a market with much more restrained labor, you're not going to see a lot of unemployment. However, you could still see slow economic growth. So there is that. But right now, until we hit that, it's not a problem. But the second, yes, we hit a slightly lower economic growth, we may face a major crisis. Not only will that mean stagflation, it could also mean issues with the national debt, because right now the national debt grows, I think, at $1 trillion in interest alone every 200 days or something like that. It's a ridiculous number. It's below 1 year, so it's growing faster than $1 trillion per year. And if you're not able to outperform with GDP, the second that starts underperforming, you're going to have a problem. Now, I don't think that the Fed is that stupid. I think they do have a plan in place when that happens. I just don't know what it is, but this is a cause for concern. That's pretty much it. Like I said, short and sweet today. I got to get to work. I hope you guys have a productive day, and I'll see you in the morning. Thanks.